friends, this is Martin from CUES, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened during the day in the market and how we can plan for a better trade for the next day. So what did we have today? Alright, the markets are continuing the rally, ignoring the global cues. Do we have a trap in here? Let's look at the charts and find that out. So here we go. So this is the daily charts that you're seeing. Right. So the daily candle is showing that it's a bullish candle. It is closed above the previous candle's high, but it's well inside the Tuesday's mega bullish up move. Right. So it's consolidating still, and that's exactly what the Bollinger Bands also showing. But look at Banknifty. It's showing that the contraction is slowly turning into expansion in the Bollinger Bands, and it's indicating a bullish candle that's above the previous Tuesday's up move candle, as well as it is above all the candle. It is also taken out the last month 19th swing high also. So clear bullishness is evident in the Banknifty for sure with strength. Nifty also is rallying, but it's not moved above the previous swing highs. Right, that's the difference. So there is a difference between the Banknifty showing very powerful moves, but Nifty is it's moving, but not as much as the Banknifty. Clear outline moves are happening from the Banknifty. Let's see the numbers. So as usual, this is for the Tuesday, September 6th, next trading day that we are doing the pre-market analysis. Right. We'll go very quickly and make it very brief instead of going the chart for each and everything, right? So that's why this sheet is made to wrap up everything. So it's a 0.72 move. That's 126 point move in Nifty. Open is a low candle, right? And that's the pattern. That's a bullish pattern. And Nifty, it's nearly 1% move. It's 385 points up, and that's also an open is high. Open is a low candle. It's a clear bullishness, and it's close above the previous candle, both of them. But we have seen that already. I'm not repeating that again. The only thing is the trend line channel is still not clearly given out. I think this would give you an indication of that. Look at this. This trend line channel is still on the edge. We can say it is broken out, but it's a weekly candle, so the week is still left with a few more days. Right? Banknifty, that week is still left, so it's about to break out, but there is no solid confirmation yet. That is where we are. So that's another thing, and then it is both broken outside. It's just on the edge. That's all difference, right? Now, Bollinger Bands, we already discussed that there is an expansion of the Banknifty, but contraction has already happened. But bias towards bullishness is there seen. But Nifty is clearly showing consolidation, clear consolidation. The bands have not expanded, but contracted and staying there. Momentum is sideways still. Yesterday it had dropped. The previous trading date had dropped. It continues to be there. Sideways momentum on the just below the RSI 60, you can say, right? But maintaining the bullishness in the Banknifty. Trend is also maintaining the bullishness, but it's very weak. That's all. So momentum trend, price patterns have got some conflicts. It's maintaining, but it's on the edge. But look at this. The VIX has spiked up another 0.5% today, and it is 19.6 inches away from the 20 mark. And it's time to be cautious. The markets are very volatile. Yesterday, the other day also, it was very volatile. Today also, even though it was trending up, it was very choppy. It was moving down to the moving averages on the long time frames and then bouncing up. So it was very volatile, kicking out people on both sides if you're an intraday or a small short swing trader. And it's a long build-up that has happened on both. Obviously, it's not unwinding. It's a long build-up, not unwinding, that has happened in the Nifty and the Banknifty. And the open interest OI on Friday and today remains the same. 17,000 is the highest put and 18,000 is the highest calls. 38,000 is the highest put. Banknifty 40,000 is the highest calls on the Banknifty. September 8th weekly expiry is what put coverage has clearly been established position 1.07 on Nifty and 1.1 Banknifty. So OI is completely in favor of the build-up is in favor, although the writing that is 1,000 points apart with hardly 3 days left to the expiry. Makes us understand why the VIX is high, and makes us understand why the optional traders are seeing the writing so much distance apart. Right? That is time to be cautiousness. And sector-wise, if you look at the metal and realty performed, right, all of them performed one and a half kind of percentage moves are happening on these two sectors, and all the sectors also closed green, but less than 0.5%. FMCG, auto, metal, realty, all of them maintain the short-term bullishness. Most bullish is FMCG and auto sector. Heavyweights, if you see all the heavyweights are closed green today, but Reliance did 1.5% up more. That's what brought the market up. All the banks, ICICI Bank, Kodak Bank, HDFC, all of them are greater than 1% kind of 1%, near to 1% of move has happened. ICICI is most bullish if you look at the overall momentum short term basis. Infinity is still in the bearish zones on the short term and from the momentum perspective. Kodak and HDFC, they are showing strength. They are also maintaining the bullish momentum. The short term only, not in the medium term. Now, another red after the VIX. So VIX has spiked in spite of the market closing green. VIX has spiked. Another is Fyers is selling, and it was only the BIs who were buying. So Fyers 800 crores of selling has happened in the cash today. Crude oil is rising, which is a concern, but it's still below the 90 levels. Dollar is this is another big trouble. Dollar is rising and keep the 20-year high. It has hit 110, not 1000. 110.2 kind of levels, which is a 20-year all-time high. So with this, combine this and read the USD INR value. So it's also near to 80. RBI intervention is happening and just trying to maintain that, but rupees at the weakest levels. And combine that with the US markets, which is in red. As of now, it's green. We'll have to see in the pre-market, but it has been falling a major support zone in a trend line channel, and towards the bottom it is falling, and it could go and hit the 30,000 on the Dow Jones index. If you see all the indexes are falling, Nasdaq, S&P 500, all of them falling. That's something it's bearish. We'll have to see whether it is taking a support, RSI support, and taking a support and slowly bouncing up or not. That is what we have to closely watch. Gold is also bearish. It is at a support zone, consolidating. SGX as of now it's showing flat, but you'll have to see SGX and the US indexes tomorrow. And if there is big moves that is there and there, obviously the market is supposed to normally in normal scenario supposed to, but what is happening? React in a similar way. But what is happening in the last several days is that market is ignoring globals and doing its own. Right, so that is good as well as concern also. The economy is much stronger as compared to the different other world economies. That's the reason why market is the institutional money is coming back, and then the retail money also is there. But we cannot hold on that too much long if there is a recession or a bigger crash appears in the global markets. You have to keep a close watch on that. You have to hedge your positions and all that accordingly, using the different strategies during this period of the recession, or if something like that comes in. If the charts are indicating that as of now it's okay, till the Dow Jones does not close below the 30,000 levels, there may not be any problem. It may take a support from there and then again start another bounce up. So I have to keep a close watch. There are some red flags, which is the dollar rising, US market bearish, FIS slightly again selling today after, but it had bought 4,000 crores the other day, so Tuesday last week. So it should not be a big problem, but more than FIS selling, it's a dollar rising and the US bearishness and the VIX that is very high. It's a ballism. So major events, today is a trading holiday, so so reaction will happen tomorrow night only. So I have to be cautious for all night position. OPEC meeting is there, PMI data will be coming. All this reaction may come after only tomorrow, so it may be probably Wednesday morning in our time where we get to react as per how the US markets react. So right, so it's two longs. ITC it's in a breakout. If you can catch that, it will be a good swing trade. Federal Bank also is breaking out, but it has given a pullback and formed an inverted hammer. You have to be cautious. But if it's giving a decent low at a support zone, it may be a pullback opportunity for it to for a breakout. Right. So the two stock calls, that is BTC and the Federal Bank. So charts we have already seen. If you've not seen the weekly stock fix videos, you would have the analysis of that in detail. Check out the playlist, please. So just to wrap up, the market is ignoring the global cues and rising of its strength, and Banknifty especially is breaking out and giving extreme strength. Right. So Nifty is trying to hold on to the momentum, slipped in the sideways, but Banknifty is clearly on the trending side. The trend indicator side is also positive. Just maintaining that bullishness. It has not crossed over to the bear zones yet. Bollinger Bands clearly showing contradicting, expansion on the upside bias on the Nifty, while pure sideways consolidation is what indicate for the Nifty. VIX is very high, is confirmed, as I said earlier. The Fyers selling, US market bearishness, and also the trend line record is still not confirmed as we had seen earlier. So that's also a concern. And week has to end. Friday we'll come to know whether we have a green close above that trend line, then probably it may be confirmation that the rally is going to continue further. So levels are very much clear. Are we going to close below the 17,000? Are we going to close above the 18,000? Right? That will be the first simplistic way of looking at how the market is performing. So if there is a close below the 17,000, it would mean that probably we're going for another swing low. It's above 18,000, it means that it may be going further up. So mild bullishness is what we may use. Keep a close watch, hedge your positions, don't take overnight risk without hedge positions, and protect your quality stock investments, long-term investments using hedge strategies or other means of hedging. If you're not aware of that, check out the videos on that. So that's a wrap up. Mild bullishness for tomorrow as well. But there is some amount of cautiousness that need to be that could turn out to be a trap, for the bulls. So you have to be cautious on that. Cut short your position size and be cautious. And only on certain confirmations should be pyramid or add more positions to that. Right. So that's the view. If that helps you to frame your view for the next day and your trade plan in some way, consider hitting the like button and share to maximum. And subscribe if you're not subscribed. We have very few subscriptions. I appreciate the help in this regard. Please share it to all. Thank you. Happy trading, happy learning, happy investing. Bye.